2022 has been a bear market, and last week we saw big time capitulation. That just means everybody threw in the towel. Investors, they sold everything. Every single sector went down. Today we're going to look at some really cool data, look at what capitulation looks like now versus prior times over the past 20 years. And then most importantly, we're going to look at what that means for stocks going forward. All right, let's get to it. All right, guys, so what is capitulation? It is when everything gets sold. And so we are looking at the daily buys and sells for stocks, right? These are the total counts. Now, keep in mind, our universe of institutionally tradable stocks is right around 1,500. So last week, get this, it was the biggest week of selling in well over a year, right? We had one day, this is on Monday, June 13th. You remember that day? 473 stocks got sold. That is a ton. That's like over 30% of the universe. Then it even got uglier with June 16th. This is Thursday. We had 539 stocks get sold. Now, you're like, well, who cares? Well, that's the biggest day of selling, literally the one day, since the pandemic. You remember the pandemic, how bad it was? So even though we're seeing immense selling, it is nothing compared to the pandemic. So you're probably asking yourself, well, how do we know that it was capitulation? Well, let's go ahead and look at some sectors, right? We all know that technology has been one of the weakest sectors this year, right? We got raging inflation, we got higher interest rates, everybody's worried about growth. Well, obviously tech got sold pretty hard last week, so we know that that is a sign of capitulation. Let's look at another area that's been getting hit all year, and that's discretionary, right? People have less money to spend, they might not be buying discretionary goods. But here is how I knew that capitulation was here, is because there were two groups of stocks that have done relatively well recently, and they got sold as well. The one that I'm talking about, the first one, is utilities, right? When people are worried, they're fearful, they will go to utilities. But look at how many stocks got sold. It's the most selling that we have seen literally all year, right? So people threw in the towel. Probably more importantly, energy, right? Everybody knows prices at the pump are getting, elevated. We're all paying high prices. But look at this. Last week, tons of energy stocks got sold. And you know what? We haven't seen anything like that all year. This further reinforces that we're seeing capitulation. So now that I'm pretty sure that we've seen capitulation, let's go look back in history at prior times where we had capitulation. Let's look at what the charts start to look like. You might see a pattern. Oh, also, if you like this type of content, make sure to like and subscribe to our YouTube channel. It helps us out. All right, let's go. We know that we're seeing signs of capitulation, but what does it look like in the past? Well, let's go ahead and look at the pandemic. One of the worst capitulation that we have seen, it literally in recent, memory for sure. I mean, we had weeks and weeks of selling. It just never stopped, but eventually it did. And that is the key point of this video, is whenever selling starts to exhaust itself, markets can start to rally, right? When people stop hitting the sell button, well, the buyers can start to take over. That's what eventually happened here in late March of 2020. So there is hope. Let's go back to 2018. If you guys were around 2018, we had a pretty ugly year, very choppy at the Q4 of 2018. So in October of 2018, we had a couple of days where we had immense capitulation. Now, markets did stage a very nice relief rally here, but they ended up falling again. Kind of similar to what we're seeing right now. It's like we're seeing capitulation and then we're falling again. Then the ultimate low came at the end of December of 2018. That was capitulation, and the market shot higher very, very fast. We can go back to see that there was some capitulation that happened February 8th, 2018. Market shot higher initially. They chopped around a little bit, but ultimately it tends to be a pretty good time to be shopping for stocks when we see huge selling. Let's now go back to 2016. So January 2016, we saw capitulation. Looks like a few weeks later, we finally hit lows. Then the market started to rebound. We see the same type of action. This happened in August of 2015. So clearly some stocks get sold harder. They start to lead us out, and then eventually the market starts to lead us out. So that's what happens with capitulation. But we also know that there was one period over the past 20 years where capitulation didn't lead to higher markets, and I'm talking about 2008. So here we have 6 periods of capitulation. And the good news is we tend to see a near-term bounce. So here's the first one. This was in late 2007, got a nice little bounce. Then the next one came in January of 2008, nice little bounce. Then July of 2008, nice little bounce. Then a huge fall, big capitulation, little near-term bounces, bear market relief rallies. That is what worst case scenario looks like. So now let's get to the bottom line. What can we expect after capitulation days? Well, I went back in our data, and there's been about 60 times where we've seen this level of selling before, going back to 2002. So here's the date in this column. This is the number of stocks that got sold. Now again, I only care about days where 30% of our universe got sold. That's usually capitulation, right? That's what we're looking for. This is the 1 week, 1 month, 3 month, 6 month, and 12-month performance for the S&P 500, the SPY tracking ETF. Now, on average, look at this. 1 year later, after capitulation days, the S&P is up on average just about 20%. It's pretty incredible. 6 months later, it's up 9.8%, so call it 10%. 3 months later, it's up 6.1%. And 1 month later, markets are up 1.3%. 1 week later, it's basically flat. But I do want to draw attention to one thing. There was one period, I'm sure you guys know, where buying after capitulation did not lead to higher markets a year later, and that was 2008, right? That was a huge, ugly recession. So basically, this could be a great time to be buying stocks unless we go into a big full-scale decline similar to 2008. I'm not betting that that's going to happen, but I want you to be aware of that just in case. The signs of capitulation are here. We are seeing immense selling in our data. Everything is getting sold. That's the bad news. But the good news is that in general, stocks are a lot higher a year later. And looking back at all of these days, over 20 years, we're talking about 60 instances. The markets are higher on average by about 20% a year later after capitulation days. Now, obviously, there was a big patch of red where buying on capitulation days did not make money. And I'm talking about the global financial crisis, 2008. Now, that was a very, very rough period for markets and economies. I am not expecting that we're going to be seeing that for 2022, but it is something to make note of. So while there's no guarantees in the stock market of what it's going to do in the future, looking at data, capitulation days tend to be great areas to be hunting for high quality stocks on sale. And that is a message I want you guys to take away with. I'm curious to hear how you guys think the rest of 2022 is going to shake out. Are you thinking markets are going to be higher or lower? I'd love for you to leave a comment. And with that, I'll see you next time.